sell the bike. I'm going to take that money and put it in a margin call, and then that'll give me money to buy. This is how stupid me as a new trader was, because I was thinking like that money was going to turn into a new motorcycle. Well, guess what? That motorcycle didn't come that year. Okay.
It's a big amount of money. It's a large amount of money in your trading account. Have you noticed a difference in how you feel going into positions, exiting positions, risk management approaches? Is anything altered?
Yeah, so I'm taking 2 weeks off and I'm not trading that account. So I haven't opened a single trade. I'm just waiting.
What is it that you have that is going to give you an edge over them? Now, that's hard to develop and it takes time to understand. But that's why I want to challenge you. Instead of just going, yes, I'm going to trade, I'm going to learn to trade, here's my money, let's click a load of buttons, do some research. You've got to be at the top of your game to keep performing.
So I think I'm going to sell the bike. I'm going to take that money and put it in a margin call, and then that'll give me money to buy. This is how stupid me as a new trader was, because I was thinking like that money was going to turn into a new motorcycle.
Here we go.
Well, guess what? That motorcycle didn't come that year. Okay.
Good morning, good evening, good afternoon, everyone. Welcome to TradeDelicious Live, and welcome to Mr. Langley, Gary, Scruffy Trader. Welcome to TradeDelicious Live. How you doing?
I'm doing very well, my kid. It seems so long since we've had a proper face-to-face chat.
Yeah. This is considered a face-to-face chat, by the way. yeah. Sitting the other side of the world, but no, it is so good to see you. It's been a hot minute. You've come in style. I can see you're drinking your morning coffee, as this is, of course, morning coffee. I'm gonna raise you one just because I'm the other side of the world, and I'm actually having a glass of wine. But we don't.
No. Steady on, boy.
Yeah, here we go. He's gonna pull out the whiskey or something. Yeah, but
no. Budweiser.
Okay, it is.
But it's too early because I've still got the job to do today.
You do. How have you been? How's trading been? I mean, it's been a solid few months since we've last been able to connect.
Life's pretty good. I mean, as with most things, it's up and down. I mean, none of us have perfect lives, shall we say. But I'm really pleased with how my trading's gone. In fact, you might see I'm now in new surroundings from when we last spoke, because trading's bought me another house. And I've got to give a salute out to the fivers, because they accelerated the purchase of the house, because the money I made off the sort of funds that I have and the money that I draw is in this. So for me, trading has been fantastic. But then again, it's just my job. And this is something that's raised with trading all the time. You know, they talk about big money all the time, the Lambo boys and all this. It's all horrendous. What do we actually do? We do a job. And if you go and do your job, you do your tasks, you get paid at the end of the week. And if you get a nice pay packet, you buy nice things. Now, is that not just common sense? If you're good at your job, you get paid. No?
I'm going to leave that in open air, right? Because I've seen plenty of people that aren't good at their job and still get paid. But that's regardless.
Well, not when they work for me, they didn't.
No, philosophically, you're exactly right, and it must just be such a great feeling as well to have the. Well, I know from personal experience that it is a strange feeling when you solidify some returns. As you mentioned, you've gone and bought another house, and to sit there and think, wow, I mean, trading on the charts is what has given me this home, right? Given me this new opportunity and this new window is it's a very interesting yet rare feeling that a lot of people don't always get the opportunity to experience. So pat on the back for you, and that's outstanding. Chris is out here, can't afford a haircut, all right, so he's obviously not a very good trader. But
I actually know who that is. A little salute to Chris. And yes, you need a haircut like this, boy, because he actually doesn't live very far from you. Well, I'm saying not very far from you. That's like saying, "Oh, I know somebody in the army. Do you know John Smith?"
Yeah.
He lives in Australia, and he's a proper, like, he's my age, and he's a surfer dude like you, because with the hair. God, I hate you a lot. I really do. So, but this morning in the group, I was having a go at him because he asked me to look at the footsie for him. I was having a about his haircut. So, little salute to you, my kid.
Outstanding.
But
Sorry.
what I'm driving at when I'm talking about doing the job, trading for me is a job. And I treat the charts with absolute respect. I treat the tasks with absolute respect. But if I was to gamble with them, is it a job? No, it's a hobby, it's a flutter, it's a punt. If I worked in an accountancy office, because essentially that's what we do, we work with numbers. If we get sort of clients' accounts wrong more than we get them right, do you really think we're going to be employed? You know, you lose clients, everything like that. And that's how I look at this. And I think that's probably one of the biggest issues with this industry. It's sold as get rich quick. It's not. It's get rich slow. Do your job, build up, get promoted. And your promotion is just your bigger account size, essentially. But just do it like that. And I think you'll find that trading then becomes very calm, very peaceful, and rewarding. But I just don't. There's too much bluff in this industry, way too much. And I'm hoping when we I can see sort of the little scroller along about Traders Day Live, and I'm really looking forward to having a drink. But we're having a proper drink, Jordan. You're not having wine in my presence. You will have a beer.
Hey, it's a bloody Wednesday. Give me a break. No, pints all around. I mean, pints are something quite rare here in Australia. We deal in schooners. I know Chris and Grim will back me up there as well. Have you had a schooner before?
A schooner? That's a boat, isn't it?
No, schooner is it's in between a pint and a pot, right? It's the middle ground. Personally, I think it's just a fantastic amount of drink, right? It's just perfect to have a schooner. The issue is they charge you the same price as the pint as they do in the UK, right? That's the problem. But no, we'll be. I'm really looking forward to having the opportunity to obviously meet and everyone else as well who's going to be attending that. We gave a couple of tickets away to our community, which I was really stoked about, and I'm really looking forward to having everyone. And as you say, it's none of the bullshit, right? Excuse my French. It's none of the mess around that a lot of the industry gets. We can go to this conference and we can have a measuring contest. You know exactly the type of measuring contest that I'm talking about here, and we can all wear expensive suits and flex. We have the best this, you can do that with us, but it's just not what the vibe of this whole event is. It's all about going and celebrating being a trader, but also learning and networking and progressing in a realistic manner, a realistic approach, and real traders. And that alone is so powerful, and I'm so excited. I really am. I'm on the plane on Sunday to get myself over there, so I'm really keen.
Happy days. I'm coming down on the Friday, and again, I'm looking forward. There's a few of my guys are coming down as well, so it's great. We do have Scruffy meets, but it's great to catch up with them and see where they are. But when you talk to somebody on a text message, you don't really get a feel for who the person is. And one of the things I'm looking forward to this event is, because it's not going out to public, it's just purely eyeball. You know, it's not being glitzy webinar or anything like that. You're going to actually get the human face. And for me, it's getting the human face of other traders that are essentially my peers, you know, that are far better than me, because I'm by no means the best trader in the world. You know, I like to think I'm consistent, but I want us to meet the likes of Steve Ward. You know, this guy deals with the top boys, you know, and if he speaks, I'm going to listen. And that's what I'm looking forward to, but also seeing the guys who aspire to be that. And then you can kind of weed out going back to who wants the job, but who just wants the glitz. Yeah. And I'll guarantee the man with the job will win.
Yeah, no, it's going to be very exciting. I just want to say a big hello to everyone in chat because we've completely neglected most of you. So Grim, Paul, Long, Fred, Alexander, Johannes, Aflabi,
Oh no,
Chris,
Duke's in.
Emma, Bruce, Cherry, and Larry. Good morning to you all, and welcome to TradeDelicious Live. It's an absolute pleasure to have you here, and of course to be joined by Gary. So, run me through it, Gary. How has trading been? Let's talk about. We've been very philosophical. Oh Jesus! Okay, let's try it again. We've been very philosophical. We've been a roller coaster of emotions from having a bit of banter into seriously what's about trading. But let's talk about the charts. Let's talk about how your trading's been going. How are you feeling right now?
At the moment, I feel really good. And one of the reasons I feel good is I follow a single process all the time. You know, my strategy's never changed in years. Not really. It horns a little bit from time to time just because as market conditions change and sort of you come out of bull into bear and various other different ways. But if you're day trading, that really doesn't matter. But essentially, I'm pretty calm. You know,
Awesome.
my account size is at a level that pays me a decent wage, so I don't really have to tinker with position sizes. What I am finding though is I'm sort of stepping well away from news trading. I don't particularly like news trading at the best of times.
What do you mean by news trading? Can you explain what you mean by that?
Yeah, take non-farm payroll. A lot of guys will see me trade. I used to trade every single one of them. But I'm not a believer in trading, sort of predictive trading. I'm more a reactional trader. My byword is trade what you see, not what you think. Now, on non-farm payroll, obviously you have the huge spike to start with. Well, you draw a fib on that, and as long as it doesn't break the top, you can enter at 23, you're risk-free at 38, you're out by 50. It's a very quick, easy setup trade. But what I'm finding now is there's other news events that are coming in that are kind of, I would say, devaluing non-farm payroll. You know, CPI seems to be massive where it never used to be. The FOMC seems to have a higher sort of boom. And then by the time you come to the Friday non-farm payroll, the energy seems to have gone out of the market. So this huge expanse candle that you're waiting for, it's just a little bit bigger than normal. So I'm finding that to be quite a difficult way of trading it. So my way of trading it is very simple because I do journal everything.
Yeah.
And I figured out that, all right, the return on investment that I put into a non-farm payroll, it's not as great as what it used to be, but it's a very dangerous thing to trade. And if I'm going to get clipped, that's probably the day I'm going to get clipped. And I don't like trading Friday afternoon at the best of times. So for me to drop that out of my sort of trading toolbox is made me a better trader. And again, it's just filtering out the noise and just honing in on something that absolutely works day in, day out. So that's kind of what I've been doing over the last few months.
I love it. I mean, you're talking macroeconomics, right? So my ears are peaked. You know, I love talking about this stuff. You know, I like diving into this stuff. So, the transition effect you're feeling where NFP's lost its volatility value, really. The viewers putting their money where their mouth is when they're talking about NFP is definitely wiped out with all the inflation talks and the interest rate decisions and everything else that's going on macroeconomically as well. That's a very good observation, but a very important observation, because what I've noticed with a lot of traders where they're struggling is they're expecting some of these other events, which historically, or at least over the past 10 years, hasn't really caused any movement. Things like interest rate decisions, right? Even over the past, maybe not 10 years, let's hone it in a little bit, over 7 or 8 years, they've not caused very much volatility because it never changed. And things like CPI, people rarely cared about unless it was a massive miss. Whereas now, one little 0.1% difference is moving the charts like there's no tomorrow, with people trying to anticipate where interest rates are going to go. So the volatility when it comes down to news trading, as you call it, has definitely shifted. I don't think it's here to stay. I think once everyone gets on top of their interest rates. I'm talking a 2-year outlook here, right? This is going to be a little bit longer. I think that volatility will eventually go back into NFP and things will die down, but there's always something for macroeconomic analysts to complain about. There's always something to generate volatility. First it was COVID, and then it's inflation. There's going to be something else. We've now got the war, and there's always something that's going to move the markets. But
well,
I'm
it's
glad
been
you
like
noticed
that. It's been like that for decades, though. I mean,
Yeah.
you go back to the boom and bust of the 80s. Then they were on about the high interest rate of the 90s. You go back into the 70s, you had the winter of discontent. From the 60s, you had Korean War. Prior to that, you had sort of the 50s. And you can go all the way back to Jesse Livermore. It just depends on, it really depends on how far you want to dive yourself into it. And it kind of raises a question when you're reading heavily into the news. I mean, I look at baby pips every morning to see what red for the news is. I just want to see what the high impact news is. And my feeling is the same. If I don't understand it, stay away from it. Right? It's that simple. I don't delve too much into it. My little bobblehead can't take in that much. Right. But what I've noticed when I'm looking at these red folders, the CPI, even though the explosion is massive, they always mark it as a medium volatility. And I'm wondering, with what you've just been saying, they're just looking at historical data and they're not looking at current data. Because really, I'm more wary of the CPI announcement than I am a non-farm payroll. Yet non-farm is red folder and CPI is medium folder.
Yeah, I think a lot of these FX calendars, which a lot of people jump straight to, that are either AI or automated generated, right? So it's going to be, this is what this is historically, this is the reaction it does, so that's what we're going to print it. I'm surprised to hear that they've got CPI in a medium react. Is that baby pips? Is it?
It's baby pips. I mean,
surprises me.
It's one of these things. I mean, but it's like everything else. You can go look at FX Factory and it'll say it's high value. I guess it's horses for courses. But what I guess the question I'm looking to raise is, when we day trading, because that's primarily what a lot of us do, and certainly when I'm looking through the guys in the chat, and I can say, well, Chili Gangster, I'll give you a little salute there because he does support me, and Larry and Fred. One thing I mention regular is, don't get too heavily bogged down in the news when you're day trading. When you swing trading, you have to, because it's a longer term and you've got to have your direction in a single way. Otherwise, you're going to get colossally belted. But really, when you're looking at interest rates, when you're looking at these news folders and you're trying to dig into it, is it really going to affect the next 10 minutes? Not really. And that's why I say trade what you see, not what you think. Because the chart itself will actually tell you what it's trying to achieve. Now, it might well be pushing up, but many times a chart is going to push down before it'll push up. Well, if you're on something like the DAX and it's going to push down 150 pips, well, you only need 20 to pay you. You know, so you're going against the trend. So being against what is essentially news and what you feel the market is going to do is not necessarily a bad thing. What's a bad thing is when you try to put too many eggs in one basket and you try to hold on to the conviction too long.
Yeah.
You know?
Yeah.
So sometimes
I completely agree.
News opens up a can of worms, and personally, I think it's a great
does.
subject. I think it's a fantastic subject. It's a little bit like politics. Nobody has the right answer, but we all have an opinion.
It is exactly like politics. Even the little bickering that goes on, because the reality situation, I mean, these economies, they're being run by politics, right? So it's always very political, but it is. And the same message goes out, and everyone who's a consistent viewer here at TradeDelicious will know as well. I love macroeconomics, right? I love digging into these. I love to see the way assets react. I like to predict the way assets are going to react, or even... there's no greater feeling for me than digging into an economy and seeing things like interest rate decisions of what economists are forecasting and knowing that they've played the safe bet. Like you just know that they're doing that to save their jobs. It's not really what they think. And little clues like that I absolutely love. I hardly trade it. it has to be said, it is so rare that I actually back my macro when I'm talking short term here. When I'm talking short term, okay, my longer term positions, they're all macro. I don't even look at the technical side of things. My long term positions and swing trades are just purely macro. But my day trading, I wouldn't touch my analysis with a 10-foot pole because the reality is,
and that answers my question.
yeah, the reality is we have absolutely no idea. Anyone that claims they have an idea is either insider trading and they're pretty stupid for advertising that they do that, or they're delusional, right? It's the reality of the situation. So no, I love chatting about it. I love analyzing. I love conversating about it. I love learning and everything. But at the end of the day, when it comes down to day trading, which is where majority of my money is made in trading, yeah, no, it doesn't affect that at all. It's included because I look for overextended markets to fade back in. And it's really important that I understand why the market's overextended. So if it's just a technical move, it's a bit of demand that's come in, fantastic. But, you know, if there has been a big decision or a press conference that's caused a larger movement, that's going to tell me that there's some real power behind this move. I shouldn't be playing with it.
It is, and I mean, I look at it kind of a different way. When I'm doing a day trade, as we call it, you might look at the macroeconomics. I just look at the chart, and I do subscribe to show me the chart, and I'll tell you the news sort of thing. But I let the chart tell me what it's going to do. So I'll break it into 3 areas. So I'll have a deep trend, a mid trend, and an out trend. So the deep trend, monthly, weekly, daily. Is that going to affect my trade over the course of the next hour that I'm going to get in? Not really. But what it can do is determine whether I'm going to have a good target or a bad target, like a conservative target. Because when I look at, see what the mid trend is, which is kind of daily, 4-hour, hourly, that's going to tell me roughly the direction that the market's pushing in over the course of the next session. Well, if those two are in alignment with each other, I've got wind in my sails. So instead of a 20 pip target, it can be 30, it can be 40, or even sort of half an ATR, etc. But if they're in conflict, it's not that I'm not going to trade it, but I'll take it to the first resistance point. And that then has to be worthwhile. Now, it might be 10 pips. Now, 10 pips doesn't sound a lot, but if you're a 5 or a point, you do it a couple of times, suddenly you're getting half decent money, and you're going against what the bigger picture is. But then once you've got that mid trend in place, you now need to time the market, because one thing I see all the time is, right, I'm looking at the chart. Well, I'm ready. Why aren't you ready? But I'm ready. Oh, I'll just go in anyway. Bang. And then they go, oh shit, this ain't working very well. This is terrible. Well, if you planned it out and you sort of think, well, this is my direction for whatever reason that you've just come to, and you were patient till the lower section lined up with it. All right, you wait an hour, 2 hours, maybe it's even 3, but then you nail it and you get paid. So that power of 3 really works. And I don't need any outside noise. The only thing I needed to know was, is there going to be a spike? And that's where the calendar comes in. So at 1:30, there's going to be X news announcement. Stay away from it. Spikes out. Very rarely turns the market. It'll spike the market, but it won't turn the market. Right? Okay. All it's done is it's put it into a position that gets me a nicer price, as exactly what you're saying, an extreme. And then you can use that extreme to time the market. Now, that's a very broad stroke of day trading, but I think most people do it the other way. They go, right, I'm on a 5-minute chart or a 1-minute chart. Wow, look, it's going down. There's a couple of red candles here. Fantastic, I'm going in. Oh no, this ain't going well. Why is it not going well? They don't know. But if they'd gone up into the grandfather and daddy charts, your dailies and your weeklies, it would have told you what it was going to do. But that's boring, isn't it? Because it's a weekly chart and it takes forever to play out.
Why would we want to look? We want energy. we want fast money. We want a Lamborghini, Gary. Why on earth would we be out there?
Do I have to get on an airplane, fly over there and slap you silly? You've already insulted me with wine.
It's good. I'm just preparing you. You know, the Australians are coming. They're coming over. All right. So you just got to be ready.
Don't you worry, son. Don't you worry.
It's,
But no, but when you're looking at the charts, because I know, and I've watched you trade, you're deep down into the low time frames. But is that just your execution, or are you seeing what the bigger picture is? What it did last week, what it did last month, what it did yesterday?
Okay. This is a good question, and something actually I don't get asked often. When explaining how my strategy works, it's interesting because,
well, not so much the strategy, more like where the idea is coming from.
Yeah, where the idea comes from predominantly is localized within the last 2 days. So big picture stuff very rarely. Like I'm not going to be on a daily or weekly chart having a look at levels. It's not something. It's something I've done in the past. It's not something I do anymore. I have an idea on where assets are going and why they're priced a certain way, and the volatility which we're experiencing purely through my macro overview. Right, I'm in all the articles, understanding what's going on with different currencies. So when there's a news event or whatever it might be, I'm already aware that it's happened and what type of volatility we're going to get. So when it comes down to my actual day trading, it's very rare I'm looking at bigger picture. There are times I've used it to gorge different price levels. How often I've traded around those price levels? Very slim. Very slim. It's more of a matter of trying to find an overextension within that session. Now, keep in mind, majority of my trading is done in the Asian session. Okay, so it's usually where we don't get very much movement, and I'm looking for movement. I'm sitting there, I'm waiting, and I'm waiting, and I'm waiting, and I'm waiting until we get some kind of movement, which is a little out of character. So whether that's a macroeconomic release, whether that's just someone in a big bank's pressed the wrong button and sent the chart the wrong way, whether it's someone hinting at something, I don't care. I'm sitting there anticipating rather an overextension, and then I'm keeping a close eye on how we've traded the past 2 days. So I'm on the 1 minute chart, but I'm zoomed so far out that I can see the past 3 days of data. And that's something it's really important for a lot of people to understand. I trade the 1 minute, but I'm not looking at individual candlesticks or how they're printing or anything like that. I'm looking at the past 3 days of data within that 1 minute because I want to see the really small volume data. I want to see the individual candles when it comes down to volume. So I'm looking for overextensions in that session and then looking at how I can fade it, essentially.
All right. So you're looking at baskets of candlesticks, shall we say, like a bunch that's coming up and then a sort of a breakout of some description.
Yeah,
I do a
instead
similar
of buying
thing.
a pack of cookies, you're buying individual cookies, but you've filled a shopping cart with them.
Right, okay.
It's a bit like that.
I get the principle because I do I call it a count back. I enter on a 5 minute chart mostly, but I monitor a 15-minute chart. The 15-minute chart just gives me time to relax and I can see what's going on. But when I'm looking at a 5 minute, I'll count it back 5. And then I'll look to see what that basket of 5 candles has done for a logical point. Now, when I'm listening to you, that sounds very similar, but zoomed in even further.
Mm-hmm.
You know, because as you rightly say, I mean, what's 60 seconds to a chart?
Yeah.
One candle, it doesn't mean anything. But if you looked at the last 10 of it and they're all clustering together and then all of a sudden there's a surge out of it, something's happening. Now, all right, maybe it's your youth and you're after the action, as you call it. You see, I'm going to tell you a little joke, right? And this might describe the old bull and the young bull.
Okay.
Two bulls sitting on.
Remember, I'm
two
there
bulls.
next week, Gary.
I know. And I'm going to keep this clean or cleaner. Two bulls sitting on a hill, and this is a very good trading trade. An old bull who's more handsome than the young bull. And the young bull looks at the old bull and says, "See that herd of cows down there? Let's run down and shag them. Shag a cow." And the old bull looks at the young bull and says, "No, will walk down and shag them all.
Well, you're gonna
Slow
have to
down,
clear
boy.
up
Slow
what
down.
on earth you're on about. Where's your analogy come from? Run me through that.
It means, well, the young bull wanted to go down and shag one cow. I'm going to walk down and shag them all.
All right, you're saving your energy. I get it. No, it's interesting. Like going back to how I go about the trading. It's unique, and I know it's different to what a lot of people do as well. But I mean, it's the age-old conversation, right? It works for me, so we trade it. But
that's the point.
Yeah, I found
Jordon.
too many times when I was, and this is personal preference, when I was in the outer time frames, I got mixed up in my longer term analysis, right? My swing trading, essentially, it generated biased opinions subconsciously. I was just generating biased opinions. So I had to find a way to stop doing that because statistically, I was missing out on so many different opportunities. So that's when I started to test going a little bit deeper, but I didn't like just looking at the day itself because you have no understanding of how we're trading this week or why we're trading a certain way. Just seeing, as you mentioned, the candles for the past 5 minutes, which are based on time, not on orders, so essentially irrelevant, waste of time, right? It's not going to be a good tool to base financial decisions on. So I needed to zoom out and really have a look and dive into, okay, how did we trade yesterday? Why did we trade that way? What's the volatility are we looking at? It's not really a matter of ATR. It's is there buyers in control? Is there sellers in control? Macroeconomically, are people interested in this long term? Are we leaving it until we have NFP at the end of the week? Yeah, and you find you can actually measure. Maybe it's just something I can do, but you can actually figure out what a lot of people are thinking on the longer term time frame at each point or each day on each currency, for example. Like we've had a hell of a week on the Aussie dollar. Okay, GDP, interest rate hike, which shocked the market, come through. You've seen how we've been trading in the Aussie dollar, I'm assuming. It's been a little bit wild. If you look to last week, you can kind of see the moment traders were going a little bit risk off ahead of this week, knowing it was going to be a big week. And those type of markets, when you get that feeling of, oh, okay, we're getting a little risk off, and then you get an extension in the sessions that I look at, I mean, it is just like smelling a fresh shepherd's pie straight out of the oven after a few pints of Guinness. It is beautiful.
No, I'm fully with you. I mean, I do similar things. I like overextended Bollinger Bands, which show the pressure points that you're talking about. You know, the market's stretching out, and I kind of akin it to holding an elevator. You know, when it's like that, you're fine. But when your weaker arm gives in, where you know the other side's going to collapse because you can't hold on to it. Now, when you're talking about risk on, risk off, that's exactly what that is. You know, you can actually see it. And I like visual representations. And a Bolly can do that for me. A fib can do that for me. Now, a fib to me is a perfect mapping tool. You know, I love a fib.
I do.
You know, and I like it for a very simple reason. If I can see this change of sentiment, you know, you risk on, risk off, and you can see it through the high time frame. Don't get me wrong, if you're down on a 5-minute chart, it's about as useful as a chocolate fire guard. But if it's on a daily 4-hour chart and you see these collapses starting to come in, that's going to ripple through the market down into your trading charts. And if you've got a fib on, well, the fib brings a calmness to the random numbers that are there, because they are key repeatable points. So if I'm seeing a collapse of, as you say, everyone's been buying and the buying and the buying, and then they go, top of the market here, it's time to come out. That fib shows you the logical points where they're going to stop. So you can trade into your 23, you can trade down into your 38. That ties into key support and resistance levels. That ties into, say, a 20 moving average, which is kind of why I only ever have a Bollinger Band on, because that has it in. You can start seeing the pockets of air to trade. And suddenly it's, as you say, you call it sort of Guinness and a pie. I call it a portrait. I can then start seeing the picture being drawn. And then you sort of suddenly go, he's drawn a fox. And that's what the chart is, because it is. It's quite tricky. It's like a fox. It's a freaky fox. But you want to see its face, you know. And as soon as I see that face, great. I want to pull its whiskers and get out before it bites me. And that's the way I look. That's the way I look at things. But I genuinely do break things down into little chunks. And then when you sort of, well, if we take your pie analogy, you can't eat your pie in one go. You know, you can't get it all in your mouth.
Yeah,
I mean, the size of me,
give me a bit of credit.
I was going to say, I mean, the size of me, I'd probably have a good go, but I would cut it into chunks, and then I would enjoy that pie. But I might eat little pieces of the pie, but I will get all of it. But if I went for all of it in one go, well, I'll probably choke myself. So as an analogy of just picking up on the fact that you used a pie, this is, and if we swing it all the way back to when we were starting about who traders are they wanting the money? Are they wanting a job? Well, do you want to get choked or do you want to have a nice meal? And that's what it comes down to. It's basically, it's common sense. You know, if you swing at the fences and it's not there, it's futile.
Yeah.
But if you just sort of steady away, I mean, you play golf, right? Actually, it's a shame. I don't know, because I play golf. I was just trying to think. I wonder if we could get around it. But think about it this way, right?
I mean, I land in the mid. I'm in the Midlands. Anyway, we can talk about this later. Sorry.
I'll talk about that in a minute. You're coming in the Midlands. That's not far away, right? We'll talk about that
on Monday.
when we're off there. Monday coming.
Monday coming. Yeah, that's right.
Oh, excellent. I'll talk to you about that off air, right? Because I'm not far away. Anyway, cut long story short, I used to play golf with a guy, right? Now, I'm a big guy, right? I'm like 20 odd stone, 6 foot, big guy. And he was that big, you know, tiny wee fella. But he used to beat me all the time. Now, when I was a younger man, get up to the tee, and it was a case of let's drive this thing into oblivion. And the ball would be in the rough because it would just hook off it being the thing. He couldn't hit the ball anywhere near as far as I could, but he was always in the middle. Boom. Then he'd walk up the ball. Boom. It's down very near the green. I'm still knocking 7 bells out of this thing in the woods, right? His next shot, virtually, he's either on the green or he's bloody close to it. I'm still in the rough. And he'd be in the hole, and I'm lucky if I'm getting onto the fairway, you know, and he used to beat me, but he could never hit the ball as far as me. And we were talking, he says, why do you try and crack the ball so far? And I'm like, well, I want to use my big driver. And he's going, no, take a 5-iron, put it in the middle of the fairway. Take a 5-iron, put it right down the fairway. And he says, and you do that, and you aim for 1 over par on every hole, and you'll have an 18 handicap. And I listened to him. And then over the years, I got it down to 11. And I hardly ever took the driver out of the bag. But when every time I took the driver out of the bag and I tried to be clever, I lost. And trading is exactly the same. You try and take a driver to the chart, it'll just, unless you've absolutely nailed it, it's going to hurt you because you'll get the timing wrong and the market can pull back. If you're trading the DAX and you've put a big position size on, that'll wipe you out in a heartbeat, you know. But if you were clever and you just took the little chunks time after time, you'd survive. And that's something that's very difficult to explain to a new trader because all they see is the money.
Yeah.
They don't see the job. And the job is just get in, get out, get paid, be thankful.
Absolutely.
That one's blowing your brains out, hasn't it?
It takes me back to a conversation I had with Mandy Rafsanjani, who's a fantastic psychological coach for traders, and she said the same thing. I mean, golf is like trading. It's you got the same tools, you're in the same position. The only thing that changes is how consistently you can swing and can swing correctly. And it's as long as you're consistent, exactly the same swing, exactly the same setup, which is hard to do. But as long as you are consistent within yourself and disciplined, I can see the. Maybe that's why I'm not very good at golf, Gary.
Get away! You're young. You should be right into it. What do you play off? Don't say
I love a
T.
good game. I do love a good game of golf.
I like golf. It's a great game.
It is.
But no, most things in life you can draw an analogy into the charts.
Oh, absolutely.
And if I was to give some parting advice to anybody, is never follow the money. Never follow the money.
Yeah.
Follow the process. The money will look after itself. You know,
Absolutely.
Get the process right, everything else falls into place. But if you're coming into this thinking it's a quick way to make money, no.
Yeah.
Do what you love, and the money will follow.
Exactly. Gary, absolute pleasure to have you on. I'm going to get you on again soon, but if not, well, I won't get you on again before I see you next week. So guys, if you want to come down, you want to meet Gary and I, and we can have some banter over a pint and talk about how bad Gary is at golf, you can do that Saturday next week, June 17. Okay, we're going to be in London for Traders Day Live. That's tradersday.live. So go ahead, get your tickets, last minute tickets. You can get in there. You can come enjoy a great day of learning, talking, and networking with everyone involved. And Gary, I'm over the moon that you're going to be attending, and it's going to be great fun to finally meet you and shake your hand.
Excellent. I'm looking forward to it. I genuinely am. Super duper.
Fantastic. Enjoy your day, Gary. All right. For everyone else,
certainly will. Good trading, everybody.
For everyone else that's still here, let's carry it on then. Let's get into a episode of Live Trading Room, right? It's what we're here to do. We're here to trade. So now that our distraction, our morning coffee, we're feeling good. We've had our conversations. We're feeling great. Thank you, Grim. Thank you for everyone who is in attendance. I was secretly, you may have seen me looking this way a lot during that chat. Okay. You may have seen me looking this way. The reason that is because I was entering a position. I was getting into some positions while Gary was having a fantastic analogy chat. I've been shorting the Aussie dollar here. It's very interesting to see the way the Aussie dollar's been reacting all day today. This is something we discuss day in, day out, right? A break higher, a break lower, a break higher, confusion. There's no predictability. There's no one way the market wants to go. That's how I like to trade. I like to see these and really short these in. You can see today we broke above the top of the yesterday's high this morning, broke up, couldn't hold it. We've come back down, broke at the low, couldn't hold it, rejected straight back the other way, moved right the way up, broke the high. Guess what? Rejected it. Now, not only did we just reject it, but what you'll see is we had a loss of interest in buyers. This whole move up, we were dropping in volume, and that's just shepherd's pie and a pint of Guinness, right? We just spoke about that with Gary. That was the exact situation I was looking for. So hopped in earlier. It was about 10 minutes ago-ish. That's not correct. I hopped in about 10 minutes ago. Yeah, here we go. Hopped in here, not where I've drawn there. And you can see we've just dropped pretty quickly to the point where we've hit my actual first take profit. So I'm almost risk-free. Let me double check this. Correction, I am now risk-free because I've just gone ahead and got out. Actually, that's a bit generous. We did have a little bit of spread slippage there. I've gone out and gotten us out. Oh, for God's sakes, is this thing going to be... Gotten out 50% of the position here, okay? And the reason that's now put me risk-free, conscious day trader Yanis, is so good to see you. How are you doing? Have to watch the replay with Scruff. Yeah, it's always great to have a chat with Scruff. We're going to have you on soon. conscious day trader. If you guys haven't seen Yanis, he does fantastic live streams. He live trades all the time. Go check him out. He's a fantastic guy as well. Yeah, we're taking off 50% of the position. Okay, that's the reason we're risk free. No, I haven't moved my stop to break even. No, I don't plan on moving my stop to break even just yet. When you take out your profits, 50% of that move, I've only got 50% of the position left running, so this stop loss won't even equate to what that was. So that's how I'm risk free right now. Really quite happy with that position, considering I was in the middle of a conversation. I was doing this behind everyone's back. I hope Gary doesn't mind, as I was just looking a little bit distracted as I looked over to my other screens. But a great little interview there. I really enjoyed having Gary on. I hope you guys did too. If you haven't, go check him out. Go check out his content. It's real. It's raw. There's no BS, and it's exactly what you want from a trading educator or from a mentor. You want raw passion and someone who's living in the moment with it all. So big shout out to Gary for coming on. I really do appreciate it. That was the only opportunity I really saw. I had a quick scan a little bit earlier. If anyone has any questions about this position, anyone has any questions about any positions or any questions at all, I mean, we've had you guys captivated for the past 45 minutes, and I know because our viewer counts remained consistent. So if you guys do want to get involved in the conversation, please do. The chat's right there. It's completely free. You can pick my brain. You can call me out, and we can have some grab some pie. I will MR trading. This is the first thing I'm gonna do when I get back to the UK. I land Monday morning. I'm gonna wait till lunchtime, and I'm gonna grab myself a shepherd's pie. Exactly what I'm gonna do. For those of you who didn't know, I live in Melbourne, Australia right now, but I was born in the Midlands in the UK. So I consider it traveling home as I am looking to do that and to meet all of you guys at Traders Day Live, which is going to be I'm just over the moon. It's going to be a really, really good opportunity. Pounds punching up today, trading in a very interesting area. Let's have a look at some economics. We've got obviously the interest rate decision for the Canadian currency. Okay. Two of my favorite people in the trading industry, so I'm sure it was a great chat full of golden nuggets. Thank you. Thank you, Yanis. It's been too long, mate. We haven't caught up in a very, very hot minute. And Yanis, I think I'm actually going to be in Bali towards the end of the year. So we might have to link up at some point while we're over there. But it has been too long. It has been too long indeed. If you guys are enjoying this live stream, please make sure you've hit that like button as well. I can see so many of you already have. And if you are new to TradeDelicious, consider subscribing, completely free. We do the live streams daily. In about half an hour, actually. In about half an hour, Aaron Collier is going to come and join us. He's going to talk a little bit about these OPEC meetings and how they've been infiltrating oil. Okay, so if you want to get a little bit of understanding macroeconomics, we've talked about it all day in today's trading session. Feel free to stick around because in about half an hour, Aaron's going to come in. But until then, you've got me. So I hope you don't mind. But until then, you've got me, and we're going to do some live trading. We're going to be keeping an eye on our Aussie dollar position here as we go short. For those of you who are consistent viewers of TradeDelicious, yes, I'm still holding on to my long-term short position in the Aussie dollar. I've been shorting it for pretty much this whole year so far. Regardless of these new interest rate decisions, yes, they made me a little bit shaky. I am still short Aussie dollar, okay? Just so everyone's aware. Those longer term positions are still sitting well, true and solid in there, even though these interest rate decisions are affecting my portfolio in the ASX. It is what it is. The pound a little bit overextended right now, and we are seeing a bit of a drop in volume, actually quite a drastic drop in volume. That this is piquing my interest just a little bit. I'd absolutely love if we could just get a little bit higher here. This drop off in volume is making this look very attractive, okay? As you can see, we're kind of sitting stagnated, and then we're trying to push a little bit higher. We have broken the high of today. We are breaking the high of the day, and we're pushing into a value area of yesterday. It does give me opportunistic vibes. if we're reading the vibes, I do like where we could potentially go here, and it is something I'm going to watch. So let's keep that on the watch list. If we can pop up a little bit higher on the pound, it might be worth just for a quick short. I'm not talking anything long. I'm not looking to take this right the way back down. I'm looking for maybe a 5 to 6 pip bounce from this area. I don't know if I'm going to pick the top. I don't know if I'm going to pick the bottom, but I do predict that I'm going to pick a bounce. Okay, if I don't pick a bounce, I'm out of that position ASAP because that means my analysis was wrong. Okay, so in expecting a bounce, I can trade accordingly, and that's why I'm quite aggressive with how I get out of my positions. I don't know if this is going to be the top and we're going to go right the way down and run for miles. I don't know. Okay, that's why I'm quite aggressive in how I exit my positions. I take the profit when I'm being given profit. I take it, I bank it, and I run. It's good fun. It's good fun. You should try it sometime. For those of you that try to hold on all the time to your furthest take profit and struggle a little bit, maybe just play around with the idea of scaling out. Okay, it's a good tool. It definitely increased my profit factor and my profit overall, and it's something worth checking out. Let me just take a sip of my wine. I hope you guys are enjoying your morning coffees or your afternoon water. What's everyone drinking right now? If you've got a beverage in front of you right now, let me know what it is. Let's have a quick discussion, a really important TradeDelicious survey discussion. What drink are you holding? Where are you in the world? What time is it? And what drink are you holding? It's really, really important information. So please let me know. There we go. All right, so we've got potential opportunity in the pound if we get a little bit higher. I'm not going to touch the Canadian dollar. The reason we're not going to touch the Canadian dollar, other than it trading remarkably similar to what the Aussie dollar has done, I don't want to be trading the Canadian dollar ahead of the interest rate decision. Expected to come in flat, all right? Was it 3.5 we're sitting at in Canada? 4.5, okay? Any Canadians in here that can tell me the overall feeling? 4.5% expected. That's what we're sitting at currently. Expected to remain flat. Keep in mind, the Aussie dollar also a strong commodity asset, commodity-driven asset, was expected to come in flat twice, and it's been hiked twice. So let's see how that goes. Tibby's in Denmark and he's drinking tea at 11:50 a.m. Russell's in Japan. He's also drinking tea, but it's 6:50 p.m. James Squire, ginger beer in the Gold Coast. Could you be more Gold Coast than that? James Squire, ginger beer. And you are, Gary's not lying, are you? You are a big surfer bloke from the Gold Coast. I can picture you exactly either way you are, Chris. Fantastic. Philip, you're in the UK. You've just had a coffee. 4 coffees? What are you doing? 10 minutes to lunch break here in Italy, Grim? Well done. A lot of tea drinkers, Club Soda from Germany. I'll be in Germany, Charles, in a couple of weeks. I'm going to head up to Berlin. I'm very excited to do that. All right, we're getting a real mix then. We've got people from all over the world. Russell coming in at 6:50 with a tea, a barley tea. Very Japanese. Dutch Chili Gangsters coming through with a coffee. All right, most people are having coffee. It's good. To be honest, if my day was just getting started or was around midday, I'd be smashing a coffee as well. We did just finish morning coffee, so that completely makes sense. Yesterday, I had a sell on Great British Pound Japanese Yen. For today, nothing yet. Let's have a look into your sell on Great British Pound Japanese Yen. Let's make sure we can write the asset correctly. Yeah, a bit of a mix. The pound's been funny today. Look at that rejection of yesterday's low. That couldn't be a nicer. And we had an increase in volume, which means I wouldn't have taken the position, but interesting. Come see us in Wainheim. Where is? Am I pronouncing that right? Weinheim? I'm gonna go Weinheim maybe. Wainheim. I'm gonna take a swing at it, but whereabouts is Wainheim? Coffee in Perth, Todd. It is. What time is it in Perth? It'll be about a 3-hour difference, right? It's a bit late to be having a coffee, Todd. What's going on there? You want to sleep tonight? Great British Pound Japanese Yen. Who here trades Great British Pound Japanese Yen? Because I know so many people like to talk about it because it's considered a volatile asset, right? It kind of trades like gold. Anyone here renowned just love trading Great British Pound Japanese Yen? And I want you to tell me why. Statistically, does it give you an advantage? Yeah, you closed at 173 flat, which is around this area. Okay, so you caught the morning downturn, I'm assuming. Coffee with 1 sugar in Detroit. Good morning to you, Joy. You are up bright and early in Detroit. I hope you're doing well. Very, very bright and early. Green 173 in the middle of the night. Yeah, okay. I have also had a few reds with my wife. Albertino Tempranillo is my partner's favorite wine. A Tempranillo. Nice red. I'm not a big red wine drinker, but it is a nice red, a Tempranillo. But fantastic. Yeah, definitely from the Gold Coast, aren't you? That's awesome, Chris. Well done. Cheers to you, my friend. Cheers to you. It's near Frankfurt, Charles. Okay, that's good. Yep, you guys love trading Great British Pound, Japanese yen. Yeah, okay. No surprise. I'm going to be completely honest. A lot of people do love trading Great British Pound, Japanese yen. Trade's very similar to gold, but volatile movements, yet no real conviction or direction in it. So it's interesting that so many people love the sterling to the Japanese yen, but it's been strong, has been strong against the weak yen. Like over the past week, or you just mean in general? Because the past few days, it's Japanese yen's looked a little bit stronger, if anything. But if you're looking a little bit longer term, then yeah, I'm probably going to agree with you. The yen has just been by far the weakest currency out there. It's not pretty. If it's not pretty for we talked about it on stream yesterday, didn't we, Russell? The fact that you in Japan, you're sitting at interest rates at 1%, while the rest of the world are going on 7, 8, 9% on their mortgages, which is getting a little bit crazy. But it's still got to go a little bit more if I'm honest. But yeah, longer term, definitely some value in the sterling against the yen. This is what interesting. I really want to see if there's going to be opportunities in the near future to bring the yen back, right? To get back into the yen. We did see a little bit of murmur of it happening, but it seems like it's reclaimed its weakness. Like in here, we did start to get the movements. Okay, Bank of Japan were intervening. It was going to be really nice. Let's start pushing. Not really happened, does it? I like to look at currencies in overall, like your heat map. Well, say less. Let's have a look, shall we? US dollar a little bit weak. We can see Aussie dollar being the strongest today, but we hope that's going to change as we've entered a short. Japanese yen also looking pretty strong towards the upside. Pound a little bit mixed. I think you're going to see more risk off. As you can see, there's very small percentage changes in the Canadian dollar. The reason we put that risk off is obviously we have the interest rate decision coming out a little bit later today. It's in about, I want to say about 4 hours time. We have that interest rate decision expected to come in at 4.5%, already sitting at 4.5%. So we're expecting to come in with no rate hike, but we know what central banks have been looking at and been doing of recent. So I wouldn't trust that analytical overview. And as I discussed with Scruff just before, I'm not always putting my money where my mouth is when it comes to macroeconomics. So I don't recommend you put your money where my mouth is either. Oh, yeah, good. Shake it out, guys. What a great day. All right, let's check in on our Aussie dollar position. See how we're traveling here. We are already risk-free, so I'm not too fussed about keeping a close eye on it. Yeah, we're sitting here a little bit. That's fine. That's fine. Volume's still sitting pretty low, which is okay. I'd like to break it on our way down here. I'd like to see an increase in sellers as we push a little bit further down, but we'll see. Vishnu, what site is this? That's a very elaborate question. You're watching us on YouTube. I'm analyzing on TradingView. I hope that answers your question, but you're watching TradeDelicious on YouTube. What I'm doing my analysis on is TradingView. The Japanese yen is like a penny stock. It's nice to trade. It's volatile. I like looking at it, right? US dollar Japanese yen is one of my most traded assets, especially in the Asian session. Not of recent because it's been just a little bit manic, but in saying that, there would have been a fantastic trading opportunity today. Strong push to the downside, drop off in volume as we continued a little bit lower. There might have actually been a little bit of news involved there. That'll be around when GDP came out. GDP for Aussie was in here. No, so it would have been leading indicators come out at 3 p.m. 15. Unless they released it a little bit earlier than 3 p.m. Maybe trade balance for China come through, which obviously is going to affect our Asian currencies, but nothing absurd out there. The heat map site, what is that? Oh, that's just that's a plugin from TradingView. So that's something we just do exclusively here at TradeDelicious, but that is just a widget plugin directed from TradingView. So I like using it to get a bit of an idea on strength and weaknesses of the currencies so far today, and I think a lot of you guys enjoy seeing that too. So I like to pull it up here on stream pretty much every day we go live. I pull this up on stream so we can get a clear overview on how things have traded so far today and what we can expect when it comes to strength and weakness moving through. Not about TradingView to show the currency pairs and its percentage move. Yeah, that's all through TradingView, guys. That's their heat map, the Forex heat map. via TradingView. Yeah, I think the yen rises in value during its session and falls during the others, but this is only during a period. It is a dynamic market. You're right, Grim. Look, the yen's very pushed by what the Nikkei index is doing. You can get a good read on the yen via the Nikkei, and you can kind of get an understanding of where investors are feeling from within Japan, or even investors looking from outside of Japan into the Nikkei. Excuse me. So it is really good to get a bit of an idea on where investors are in the local economy, because it can give you a bit of incentive on whether or not you should be going long or short in the currency. I like trading the Japanese yen during the Asian session, because usually what I pair it against, the US dollar or the euro or the pound, it's very rare I trade Great British Pound, Japanese yen, but in the instance that I would, they're asleep. Right, those assets are asleep. They're not really moving much. So a lot of the movement in that asset at that point in time is solely the Japanese yen. So it's like I'm just trading the Japanese yen realistically, because we don't really have any other movement happening elsewhere. And it's one of the reasons I love the Asian session as well. But recently it's just been so messy and lacked a little bit of conviction. Okay, we ripped straight through on the pound there, so I'm glad I didn't take that position, but I'm still thinking there may be an opportunity. I just don't know if I want to over risk myself in correlation here with the US dollar. So we ripped through the first zone I would have really liked. This would be the second zone, which we're pumping into now. Volume's still down low. I think I'm going to sit it out. It is a nice opportunity, but I don't want to over risk myself with the way that the Aussie dollar is moving already. I think I am just going to sit this out, but overall it looks pretty good. I mean, we've had a decent aggressive push, a 55 pip move on Great British Pound US dollar, right the way up into this top zone, drop in volume at the final moments, and this volume is the top of the value area of yesterday. And you can even look the day before, it's the day before's high. Definitely an area where a lot of orders are going to be. I'm really, really tempted. I just don't want to over risk myself. Yeah, I'm going to sit out of it. I don't want to overexpose. What did I miss here? Do you think it's better to use visible range volume profile or session volume profile and volume profile indicators? I prefer to use session volume profile. I like to have a look at the day. I like to have a look at how we're trading that day, where traders have traded that day, and same with the previous one. So I prefer to have a look at the session rather than the visible range, because as I zoom out and zoom in, my volume's going to go all over the place. I prefer to have it kind of fixed on the chart there. It's true, I noticed too, but likely it was an all-time high. Yeah, it's messy, but price respects key levels on GJ. Sometimes. Sometimes, depends what you mean by respect. What's the right ticker for the Nikkei index? The Nikkei will literally be what'll be the future market for the Nikkei? There you go. Nikkei 225 should give you the old. Oh no, it's not going to print it. I can't remember the ticker for the Nikkei futures contract, which is actually going to be worth. No, it's not going to print well. We'll have to. Look, I like using CFDs. Right, I like having a look, which unfortunately they don't own the rights to the Nikkei index, so they go with the Japanese yen. They go JPN 225 is what the CFDs do, because they don't own the rights to the Nikkei index. I'll figure out what the futures contract on TradingView best to look at is, but I usually am just looking at the CFD prices. Excuse me. Hello everyone, have a great day and a great trading day. Evan, aren't you just a beautiful person? Thank you for tuning in. I hope you're having a great day, and I hope you have a great trading day. So far, so good. I think that position might work out in the pound, and it's something I'm going to keep a close eye on, but it's not something I'm trading. Let's have a look here. Yeah, we did actually manage to get a little bit up above, a bit of a spike in volume. And Aussie dollar's just slowly trending back up to the upside here, which is fine. I'm okay with the Aussie dollar still moving to the upside. Give it some room to breathe. This is something I always discuss and something I always share with you guys as well. It's why I don't bring my stop to break even to get my positions to break even. I prefer to take out part of the position down here and bank it, is because instead of now only having this much room for my trade to breathe or my analysis to move through, I've now got this much room for my analysis to breathe with the same outcome, right? The same outcome. So that's why I prefer to take part of my position off to get myself to a break-even point rather than bring my stop in to get myself to a break-even point. So I can give it some, oh, I didn't mean to do that. So I can give it a little bit of room to play around with. If we manage to break up above here and break the high of the day, especially with lower volume that we're sitting on right now, I will look to just close out of this position and cut the losses and take the small win that it will give me if I manage to get out around here. I don't want to be, yeah, I'm actually going to bring the stop in there. I don't want to be in this position if we go. Do you see the DXY weakness starting? Let's have a look into it. Excuse me, got a little tickle in the throat there. Mixed, very mixed in. I don't want to remove someone else's drawings here. Okay, obviously we've been traveling sideways for a little bit. This is since early Feb, and we've actually been in this range a little bit longer there. We joined in this range last December, and we've just been sitting here still, and we can even bring this over. Whether we see weakness coming in, that's an interesting question, because we usually see correlation between how the S&P 500 returns, right, and how the S&P 500 performs with how the US dollar performs. You usually see a bit of a negative correlation there. What's really interesting, the S&P 500 is still continuing higher, and indices are still continuing higher. The issue is there's about 6, maybe 7 companies of those 500 companies which are carrying that return. Things, for example, like Nvidia, which we've been talking heavily about. And the issue with Nvidia is it shouldn't be that highly priced, but it is that highly priced, and it's carrying the market with it. So there's definitely a bit of I don't want to say stagnation, but there's a bit of the word I'm looking for here, not unpredictability, bit of a mixed reaction coming through when we have a look at these assets. A bit of a hesitation, that's the word I'm looking for. Hesitation. We are witnessing a bit of hesitation come through with the US dollar, but I think people are just waiting to see. I mean, we've had the whole debt ceiling saga, right? We're waiting to see how that plays out. We're waiting to see how CPI comes in, waiting to see what unemployment does, because we need unemployment. I say we, I'm talking about the US dollar here. They need unemployment to rise realistically. It's the way that the economy is going to re-heal itself. They need a lot to go in the favor for the US dollar to look a little bit more promising, or the counterintuitive for the S&P to look a little bit more promising. So it's interesting. It's interesting to have a look into whether or not I think we're gonna sit in this range for a little bit longer, if I'm honest with you, Russell. I'm not in a position to where I want to call whether or not we're bullish or bearish on the US dollar. I'm agreeing with mostly with the way we're priced right now. I'm waiting to see macroeconomically what's going to change, and then I'll base my decision. You can see that kind of playing suit in the charts at the moment. And one thing to really be aware of, we spoke about this with Scruff not too long ago. One thing to really be aware of when we start seeing these conditions is when the macro data hits, which is going to gauge the direction in which people want to put their money. It's going to be big. It's going to be real big. So it might be expected. It might be forecasted at least weeks in advance, and you get a bit of a bull run prior to the event. Not the event itself. Sure, you might get 30, 40, 80 pips, whatever. But I mean the move post-event. It will cause a bit of movement. It will cause a bit of volatility, and it will be exciting to watch. So keep your eye on that if you are a US dollar trader. Yeah, pound's ripping through, so we made a good decision not to short that. I'm glad we didn't overexpose ourselves. I'm assuming Aussie dollar is going to be doing the same. Yep. Looks like we're going to be finding our way out of this position very, very shortly. Let's ensure my stop loss has moved in. But that's okay. Even with this, we're still looking at a little bit of profit. Nothing to write home about or nothing to quit your job about, but a little bit of profit nonetheless. That's if we do get stopped out. We'll wait and see because volume is still pretty low. I do still like the way this position looks, but if my analysis doesn't reign true, I know statistically that means leave it and stop trying to trade it. So that's exactly what I'll do. We'll wait and see what we can achieve. Pound. A bit of a rejection. We didn't quite get to the high of yesterday. It tried, but we're not up there yet. Nothing to write home about. What are you guys looking at? Any open positions? Talk to me. Any questions you guys may have, please fire away. I've absolutely loved doing this stream. You guys have been so interactive and chatting with me, and it's just the way we like it. So please tell me a bit about yourself. Tell me about your trading. Tell me what you're looking at. Ask me a couple of questions. We've got about 10 more minutes of live trading, and then Aaron's going to join us, and we're going to have a really in-depth discussion talking about OPEC and what we can expect out of these OPEC meetings too, which is going to be very exciting. S&P 500 down 0.10% so far today. Bit of a mixed reaction. Oz 200 looking pretty negative once again after yesterday's CPI announcement. You're short on the US 30 on the Dow Jones. I didn't even look at the Dow Jones. That's what's I know. Well, actually, I'm pretty sure Scruffy likes to trade the Dow Jones, but it's not something I really look at. What's leading you to go short here? What time frame are we talking? What's your analysis here, Geordie? Are you looking at a short kind of scalp? Are you looking at more of a swing? Do you see the Dow Jones coming down in the near future? Are you reading between the lines with the Nikkei? What are you forecasting here? You have the same open position open over the last couple of weeks. Fantastic. Yeah, it sometimes gets like that. It sometimes gets to the point where we're just kind of sitting back and watching. I mean, I've been holding my Aussie dollar position, my long-term one, for going on 6 months now. I've been sitting in that position. So trading definitely does get like that sometimes. We just kind of sit here and we wait. We wait to see what happens, and we wait to see what the market can provide for us. We know statistically that we have an edge, so we back it. What caused the Nikkei to drop so dramatically this morning, Oz time? I wasn't trading it early this morning, but there's a good chance it would have been, we had a lot of news. We had a lot of news, APAC region, okay? We had a lot of Chinese news. We had let me double check here for exactly what was printed. We had the US denominated trade balance from China, and we also had the actual trade balance, which come through at negative. That come through around 1 o'clock, okay? So that was, we didn't really generate much movement. This movement wasn't generated till Europe time around the close. So this would have been generated around 11 o'clock. 11:30, we had Aussie dollar GDP. So I'm just going to say this was straight up volatility in the actual Nikkei index. There's nothing that I can read from naked eye charting right here that's going to tell me this was... the way the volume went tells me that there was definitely some interest. Let me have a look here. Any news coming out of Japan? Russell, can you help us out with that? Did anything news coming out of Japan that moved the Nikkei today, or was this just a nice little volatility move? We want to have a look into our indices. We want to get down. World Bank forecasts US 2023 growth at 1.1% versus 0.5% in January. They're expecting better conditions. Interesting. Oil, US, blah, blah, blah. No, this is too far away. JP Morgan CEO, do not particularly significant if the Fed raises 25 basis points. US Indo-Pacific Coordinator Campbell, the potential for miscalculation with China is real and growing. Yeah, I'm not seeing too much out there that's really to write about. Do you have a positive swap on your Aussie dollar US dollar trade? I actually haven't even looked into that. Give me a second. I'm going to check that. Let me just ensure that my private information doesn't quickly get shown on screen. Make sure I open this platform correctly. Okay, that's fine. I didn't want to end up putting all my account details out there. No, negative swap. I've got a negative swap on those positions so far anyway. Nothing crazy, but negative swap. It's the yen. Bank of Japan is worried about the weakening yen. Okay, there you go. So there was a bit of a speech earlier today, was it, that caused a move in the Nikkei? That's good to know. Where are we? Come on. All right, pound is coming back in, which tells me the Aussie dollar is probably doing the same. Sure is. Okay, might intervene, you know. I swear they'll do it all the time. Silly. Yeah, I mean, Bank of Japan love random announcements though, and to say they're doing different things all the time. They love to cause a little volatility in the markets. They absolutely froth it. They're probably the most active reserve bank out there because they love just dropping little sly hints and make people panic every now and then. 5-minute resistance area 33,544, as well as being a 50 fib area. Small 100-point take profit. Still thinking we see a rise going on the DAX, as there seems to be no real fear at the moment. That's an interesting concept, isn't it? That whether or not we're going to see fear in the market. I think there's going to be a rug pull. I think a lot of people are sitting too well right now. I mean, in Australia, our economic outlook keeps getting better and better, which it really shouldn't be right now. And general public are just like, yeah, these interest rates suck, but they still got money. They've still got so much money to spend and so much money to be out there in the market with. So it's an alarming process on how we're going to remove so much of that money supply. And that's just what I see here in Australia, not even around the world, which is where they're battling the similar things. COVID hit, everyone got paid for doing nothing, and then everyone went to work from home, and everyone realized that they were able to work from home. That spending got absolutely slammed, and so many people have so much money. You couldn't go out, you couldn't spend money, you couldn't go on holiday, you couldn't buy new things. It was too difficult. So what did you do? You saved. You put all your money in your bank, or you put it in investments, and now we've come out the other side, and everyone's like, okay, we need to actually remove some of this money. And public's gone, no, I like it. I want to keep it. You can raise these interest rates. I don't care. I can afford it. I've saved a lot of money. And I think that's the big issue right now. Everyone's got too much money. We need to remove a load of that money from the cycle, right? The M4 supply. Let's see. Let's see. Let's not get too in depth there, but let's see what happens. And fear, yeah, when fear hits, fear moves markets. It's just a matter of when and if fear will hit. Keep an eye on it. Slow position. It's amazing that I always do these live trading rooms on a Wednesday here, right? And we do the live trading room and we trade, and it always seems to go sideways. I mean, I get more movement in my agent session. There's no issue with saving money. I completely agree, Chili. I think it's a great thing to do, right? And I think so many people did it, and that was good. That was really good. But that's the problem. That's the problem, right? Is there's too many people that have it, and like when we're talking not as a person here, Chili. I'm talking not as a human being. I'm talking as an economist, right? A self-proclaimed economist, and I'm talking. If we were running the economy as a business, our clientele have too much money, right? We're trying to curb spending. We're trying to stop people from paying these higher prices. We can't because they can afford to pay the higher prices, so they're continuing to pay the higher prices. And that's making our job really hard to bring these prices back down so that lower class doesn't get left behind and we don't get stuck with 50% inflation. That's how I'm looking at this. The issue is people can still afford to pay these higher prices, which means they're going to pay the higher prices, right? The demand's still there. Which is the problem of the central banks right now. That's what they're trying to remove. So that's why we see increases in interest rates. So money's harder to get your hands on. You can't go out big loans. And the guys that do have big loans now have to pay a lot of money back. So they reduce where else they're spending money. They reduce their spending out in the economy or buying new cars, new boats, new houses. No, they stop spending because they can't afford to spend. And when you stop spending, the demand's removed from the market. Therefore, all of the businesses and the products drop their price to try and increase demand. Inflation 101, right? That's what they're attempting to do. The issue is, I think, in theory, what they're doing is working, but in practice, everyone's got a lot of money right now, and people are still going out and spending that money, and that's a big issue. That's a big issue when you're trying to curb spending on a macro basis, which is something. I mean, that's the job of the central bank, right? It is. I can help them if they want to remove some money. Yeah, we can start a trading fund and we can remove all their money if they want us to. But it's always good to have emergency funds. It's an absolute must, Chili, to have emergency fund. If you guys don't have emergency funds, I highly recommend you do have a rainy day fund, as they call it. Yeah, I have one. I think everyone should have an emergency fund. It's really important to have that. Once again, I'm not talking here about general saving tactics or how to make people more money or anything like that. I'm talking from a economic perspective, removing the humility. You know, there's consequences to actions which we're talking about today in different ways that we move. Unemployment going up, you know, in the US, for every 0.1%, I think it is, of unemployment that goes up, 100,000 people die. Little things like this I'm aware of. But when we're talking purely as traders and we're talking purely from a macro perspective, I remove the humility from the conversation, and we're going to talk based on statistics and based on evidence, because that's what we need to do. We're traders, right? We observe, and then we base our decisions off of our observations, and we can't sit here and think about being a good person or a bad person, because at the end of the day, it's still going to happen. Whether or not we make money is up to us. That's why I like looking at that. That's getting very deep, very I'm going to try to say the same word again. Philosophical. Not really a direction that I want to go, but it's where we've ended up. So, hey, if anyone wants to agree with a little bit, I agree. Everyone has money, so to speak. Superannuation, boomer age, real estate, the list. Yeah. Boomer age group and real estate go hand in hand. I mean, you've seen all of them come out being like, yeah, you want to be financial freedom? Just buy 4 houses, just buy 6 houses. It was like, okay, you did that with a 0.1% interest rate when the house was $200,000 for a 6-bedroom. You're now looking at $1.2 to $1.3 million for a 4-bedroom with an interest rate of about 10%. But yeah, boomers, real estate, it definitely came along. The list is long. Everyone's got too much money. It's the way it is, Larry. It's the reason we're faced with the issues that we're faced today. It's the reason inflation got a little bit out of control worldwide. Everyone got too much money. I mean, money printer go... Great economic explanations. Thank you, Fred. I appreciate that. Guys, I think I'm going to close this position here. I think I'm just going to cut it there and take the winnings. Yeah, I have. I've gone out and closed the position on Aussie dollar there. Great little trade. We moved, tell you exactly how far we moved, about 6 pips. 6 pips, we took half off. That's a 3 pip profit. And then we had a 1 pip loss there. So all in all, what did we do? We made 2 pips. Outstanding. What a great trade that was. That's all right. That's all right. A little win, but a win at that. Pound still rejecting. So it looks like we're getting a bit of divergence between the Aussie dollar and the pound here. Pound did reject this little area and is continuing to push to the downside now. Volume was lower. It did spike a little bit just there, which I don't love to see. But if anyone was looking at shorting that pound, interesting to see the way that we're unfolding. Let me go ahead and set all this up to ensure I'm in the right one. There we go. And we'll get ready for, there we go. That's all working. Fantastic. Sorry, guys, bear with me while I'm just getting all of that ready. Yeah, if anyone did take that pound short, congratulations to you. It's looking pretty. If you guys missed it, I sat down with one Colin, the CEO and founder of Darwin X. I did recently. Highly recommend checking out that interview. Just a little 9-minute little discussion on why they decided to sponsor the Traders Day live event coming up here, which was really interesting. 15-minute here. We are GJ. You're looking at GJ on the 15-minute. GJ. Volume still dropping, still climbing higher into the high of the day. Not bad. Oof, look at this range. It's an interesting one. I like the fact that volume's dropping consistently, losing interest, right? People are losing interest. I like that. I like the fact that we're heading higher, and I like the fact that we're heading into the high of the day. The issue is it's not quite the high. Oh, it's the point of control of yesterday. Excuse me. What to do when you've got a cough? Drink some wine. It'll soothe it. Just so everyone's aware, I am in Melbourne, okay? It is 8:30 p.m. right now. So I'm not drinking wine at midday or early in the morning as the markets open up. It's 9 p.m. here, okay? I'm allowed a glass of wine. It's been a long day. But I love it. I love that we can do that. I love that we're very relaxed here at TradeDelicious, and we talk trading and we talk exactly, no bullshit, exactly what it's like, what it is we do here and how we move it. But yeah, Grim, I kind of like it. It's not, excuse me, it's not something I'm going to look to trade. Excuse me, wow. Not something I'm going to look to trade. No, I'm being attacked. But I do kind of like the way it's setting up. I will pay what I want to pay. What? I will pay what I want to pay. What do you mean? What do you want about? Now I'm just intrigued. I'm just intrigued with what you're talking about there, Grim. Let's pull this up. All right, let's have a look here. That position is done and dusted. We can leave that as suit. I won't be re-entering the pound. That opportunity was gone. It would have actually been a good opportunity. I did mention catching just like a 10 pip move would have been the bounce that I was looking for. We would have caught a 10 pip. That's already moved 15 pips. So we would have caught that 10 pip move if we did execute on it. But this just goes to show, guys, you don't always have to execute in positions. Yes, I missed out on this position here. The reason I missed out on that position is because I didn't want to overexpose myself. Part of my trading plan, and I'll do it again and again and again because I know statistically it's better. For me, the stop loss is the expense of the trade. It is. You're exactly right. Yeah. And well, you got to throw commissions in there, but yeah. You're pretty much right. You're pretty much nail on the hammer there with what you're talking about. I agree with you. Let's make sure this is set up. Guys, if you have any questions for me, anything you want to have a discussion about or anything you want to get an understanding of, please do not hesitate to ask. Okay, it's why we're here. It's what we do. And it's the best opportunity to ask us when we're in these live streams, especially when we've had so many people join us and Gary to start with, and we've got Aaron joining us here in a little moment. It's a really good time to pick our brains and to get a deeper understanding on what goes on in our minds, because sometimes I don't think we know what goes on in our minds. I think I speak for multiple people there. It can be a little bit crazy when we're actually trading in the zone as we're trading. It's pretty interesting at that, I can say. I can leave you with that. Yeah, okay. So overall, Aussie dollar position, decent, made a little bit of money. Glad we've exited where we've exited. Let's let that run. All right. Risk off, gone. See you later. Next position. We didn't trade the pound. The setup was clean. Everything was clean. We didn't trade the pound because we didn't want to overexpose ourselves to the US dollar. I'm quite happy with that. Yes, we missed out on a little bit more profit than what the Aussie dollar would have delivered with us. However, I'm glad I kept my risk in tune. I'm glad I didn't overexpose my positions there, and that's really important for me and part of my trading plan. We had a play around Great British Pound, Japanese Yen, looking pretty spicy. Definitely some opportunities. We push into the high of the day, the point of control of yesterday. I mean, you're seeing this overextension move in the pound, push higher, higher, higher. You look at volume. We've been dropping off for the past 3 hours. People are losing interest in this. Okay, that's pretty good. I'm not gonna lie, I'm really tempted. Yeah, actually, you know what? Yeah, I like it. I like it, Grim. I'm gonna go low risk here because I don't usually trade the asset as prominently as what I would like if I were looking to seriously make some money on this. So I am gonna sit a little bit more passive than what I do. A little bit lower risk. Oh, don't run without me yet. I haven't executed. I'm just doing the visuals. Come on. Let's go. Let's get involved here. And all right, we're in. Well, I definitely wasn't that generous with my entry, but sure. Let's see where that can go. And in the meantime, while this trade does this, I'm going to introduce you all to the very wonderful Aaron Collier. Aaron, how are you doing? Actually, hang on a minute. For some reason you're not popping up on my screen. Give me 1 second. One moment. Sorry.
We're here. We're good.
We're good. We're good. We're up and running. There we go. How you doing?
Magnificent. Good morning, everybody. Good morning, afternoon, evening, depending upon where you are. I'm well. How are you, man?
I'm well. We've had a decent day. We've had it's a Wednesday, and I'm enjoying a nice glass of white wine. Okay. So we're trading. We're chilling out. We've had a great discussion this morning. Your guys this morning, with Gary, Mr. Gary Langley, your Scruffy trader, come and joined us for an episode of Morning Coffee this morning, and we were just getting very philosophical. That's the word I'm going to go with. Right. Talking about different issues that we face as traders day in, day out, and what we can expect moving forward. Gary is a very, very good man. He's brutally honest. And it is really good and refreshing to have a chat with someone who no BS. This is how it is. This is what trading is really like, and makes his money from trading. So it's really interesting to chat with someone like that.
Always, I had a chance to catch some of it. He's definitely a straight shooter. I have a lot of respect for him.
He is, to say the least. But how are you doing today? How's your morning going? I know it's bright and early there. How are you feeling?
Great. There's a lot to talk about. There's a lot going on in the markets, as always. I've been able to take a look at some very, very interesting things, whether that be for short-term opportunities, long-term opportunities. I'm really excited to get going.
Yeah, it's good that you're just waking up. We've had a couple of trades here. I'm not sure if you've seen or not, but we've had a couple of little winners, at least analytically, a couple of winners. One winner banked, and we've just entered a short position here, which I'm going to be monitoring while I let you do your thing, because you're going to have a chat about OPEC today, something a little bit different, a little bit more commodities based. What are we in for?
Absolutely, yeah. So there's a real concern here. There's a real interest here, because with OPEC, usually when they make decisions, oil prices follow immediately. And that isn't necessarily what happened over this weekend. The biggest thing that happened really was, in the news that we're seeing everywhere, is Saudi Arabia cuts 1 million barrels per day starting in July. That would usually mean the price of the commodity should go up. Supply and demand, right? It went up for about 15 seconds, and then it didn't, right? Confusing. What's going on here? So I wanted to jump into that a little bit and kind of explain the whole look at not just OPEC, but the whole condition of the oil market right now, to help us get a better understanding.
Yeah, it's good, and it's good it's on the topic. I mean, we know oil, and for our currency traders here, obviously Canadian dollar is heavily influenced by oil as well, and we've got big Bank of Canada announcing the interest rate decision a little bit later today. So this is going to be really good for you guys to get a holistic view on not only the Canadian dollar, but also oil itself, which is a heavily traded commodity and something a lot of people like to discuss and get an understanding of. You've mentioned it before. I mean, OPEC's running around just like a mob, right? Like they're just like a gang, and it's just like, nah, we're gonna do this, we're gonna do this. And, Larry's just come in and said, "Cheers, Aaron. Oil is one of my trades." He's from West Texas, so there you go. He's gonna hit the nail on the head and know exactly what you're talking about.
No, there you go. Well, welcome in, Larry. But yeah, that's exactly the case. It affects so many different currencies. It heavily affects everything that the Canadian dollar does. They don't have much else in their economy, I'm sorry to say. But exactly like you were saying, when you hear about OPEC, the official name that most people use, whether that be at CNBC or Yahoo Finance, whatever, they call it the OPEC cartel. That's not a joke. That's what they actually call it. And that's what it actually is, in my opinion. It's a cartel. It's a group of organizations in countries that have complete control over their oil production, and they just, they can't not have 8 Lamborghinis a month. They need to have 88. And because of that, they often do things to artificially kick up the price of a commodity that's so intensely needed by so many people throughout the world. There's a lot of really interesting things going on in that market right now. As we've seen, Sunday, Saudi Arabia made it official, hey, we're going to cut 1 million barrels per day. the price was for Brent crude. That's what I'm looking at for a standard on price of oil. It was around 75, 76 bucks, and it fell dramatically to 72. This morning it's up back to 76. What in the world's going on? We have to remember a few different key things about oil right now. One, everything happening with Ukraine and Russia is still going on. That war, unfortunately, is still raging, and it's raging quite rampantly. Oil has been obviously sanctioned by the European Union from Russia as well as from the US here. And we would expect Russian oil to take a particular hit, of course, but India and China, they've been very keen on trying to get this Russian oil. It's not just because they're friends, not just because they're allies, it's because Russia has offered them a discount, and that discount is steep. So we've seen reports in varying terms that different organizations, different petroleum companies in China as well as India have gotten oil from Russia at as much as a 30% discount towards the height of this conflict that they've had in Ukraine. So naturally, even though it hurts India as well as China in the political space, they're very willing to go ahead and take a little bit of that discount, and it's hard to blame them. You know, if you can, you have to get your money somewhere. As traders, we often understand opportunity costs, right? And their opportunity cost of losing out on this oil is a big deal. So they've been taking their money and running. We not only have that, we have China reopening, and their reopening has been slow. It's been okay. We've been very excited to see that China has re-entered the economic space after everything that's happened in the pandemic. But the reality of it is their manufacturing sector is struggling. The manufacturing sector in the U.S. is struggling as well. I talked a little bit about the ISM services PMI. I'll talk a little bit about this later this month in the ISM manufacturing PMI. Please don't let your eyes glaze over. We're going to get through this real quick. All that is, the manufacturing PMI, it's a survey that they send out just like the services survey, where they ask purchasing managers and manufacturing companies, hey, are we doing well? Are we making money? Are we not making money? And the fact of the matter is the manufacturing sector it's slowed a lot. There's a lot of money that's being lost in the manufacturing sector just by virtue of demand, production's lowering, and their numbers have lowered 7 months in a row, which in ISM terms means that the manufacturing sector is officially in a recession. What happens when you're officially in a recession? Less people have money to buy things. And in commodity markets, there's a lot of costs to having these things on hand. And by these things, of course, I mean oil. Say you're an oil producer, say you're someone like Marathon Petroleum, and you have barrels upon barrels of oil that are just hanging around. It costs money to keep that barrel just around. It costs money to keep it in the warehouse. Oil is a liquid product. It's literally affected by the weather. Larry, you'll know in Texas that if it gets really hot one week, you might have less oil produced in the weekly production numbers because you lose so much oil to evaporation. That's the kind of product that it is. So as we're letting barrels upon barrels of oil just hang around, oil companies are losing money. So what have they been doing? They've been doing a process called destocking, where they're allowing themselves to sell even more oil at lower prices in order to make sure they're just getting it out of their hands. These are some of the items that are keeping oil prices so low, and it's one of the reasons why we really haven't seen much of response from the OPEC decision. I shouldn't say OPEC decision, from the unilateral Saudi Arabian decision to cut oil production. So I want to talk to you guys a little bit about that to get a better understanding. I know it's complicated and some of it can be quite boring, but it's exciting because there's going to be real opportunity for us as traders. For example, if you're interested at all in trading something like the Canadian dollar and you're interested on the potential upside in some of its pairs, you should know that the EIA short-term outlook report recently came out yesterday. And that report suggests that demand is not only going to raise, it's going to raise quite sharply coming into the end of this year. As I said, the manufacturing sector has been struggling, but as China continually opens and as producers become a little less squeamish about recessionary concerns, we're seeing manufacturing slowly but surely hit the bottom of this bell curve. So they'll potentially be coming back up towards the end of the year. The EIA suspects as much, and they suspect crude prices to jump back into the high 70s, maybe into the 80s towards the end of the year. The IEA, another organization that takes a look at energy outlooks, believes that, and not just believes, they've reported every month that the demand for oil is continually growing month over month. What's this going to do for products that we trade? What's this going to mean for opportunity as traders? That means that the Canadian dollar could potentially gain strength as things move forward. Of course, we have to wait on the Bank of Canada and their interest rate decision later today, but items like that are going to really start to support these prices as they move up. Companies like I mentioned, Marathon Petroleum, it's no secret in the commodity space that a lot of very respectable traders have been starting to build positions in these kinds of products. The reason being is because as we see the bottom of this bell curve and we start to produce more and more oil, China becomes more and more interested in opening their doors and buying not just from war criminals in Russia. Things are going to slowly but surely change in the oil landscape. And I just wanted to break that down a little bit and get a better understanding for you guys. Larry, you're saying that Saudi Arabia, they're aiming for $80 a barrel. They're aiming for $120 a barrel. They're just gonna do everything they can to get it above where it is now. The reality of it is Saudi Arabia has a very big part to play in this, but the rest of OPEC is really trying to keep production where it is currently. It's one of the reasons why we haven't seen things change right now. But as things move forward over the next few months, we'll see a change. Now, what does that mean as well for gas prices? Gas prices tend to go up in these types of situations, so we are expecting to see gas prices continually rise. As a matter of fact, the U.S. strategic reserves, that was a really big news point over the past few months. The United States, a strategic reserve of oil that it releases when it believes oil prices are too high. Several people in the Biden administration, most importantly the energy secretary, have made a point that they're trying to refill that strategic reserve. So their target is around $60 to $67 to start buying. But if this thing starts to get away from them, if we're at $76 this week and we're at $80 next week, the U.S. government could be a participant in the oil market that would continue to bid us up. It's one of the reasons why we love and hate commodities, right? It's not just traders like you and I coming in to buy these products. The guys with crazy liquidity, like Jordon, are hopping in and they're buying up millions upon millions of contracts of this oil production. And because of that marvelous, wild liquidity, these are some of the reasons why the oil markets have a tendency to be so volatile.
Yeah,
And
you're gonna leave me on that. You're gonna leave me with I'm the one that's bringing all the volatility. Yeah, good.
I'm gonna stick with it. We try to be honest here at TradeDelicious. We try to be straightforward. I've been trying to reveal Jordon's incredible liquidity for some time now. I'm not sure if it's working, but that's where we're at.
Oh, impressive. I appreciate the effort, but I especially looking at what you're saying there. I mean, I've instantly resonated. Maybe it's because I'm from the APAC region, but with the China opening up, the slow that they're getting, but the fact that they are opening up. What's really interesting is earlier today they actually announced their trade balance, which has just fallen perfectly for what you're discussing. The fact that they are opening up, but it's so much slower than what they were expecting. I mean, their last time, and this isn't. It's forecasted to come out regularly, but this is the Chinese economy we're talking about, right? So they throw this number out every now and then. Like there's not really much structure to this. Last time we were out there, 618 billion in trade balance, expected to come in at 676 billion. So we're actually expecting to grow the trade balance for the Chinese economy. 452 billion they come in. They missed by over 200 billion, which is obviously not a small miss. And that's just really highlighting what you said there with China slowly opening up. It's not been great, but they do use a lot of oil. And as this slowly grows and as they do slowly get back to full production, demand for oil is only going to increase.
100%. And that's one of the issues that we have with the situation as well. I mean, look, China is it's no secret that they are a different kind of country. They run things slightly different than the rest of the first world countries around. China's numbers that we're receiving from them, we have to take everything with a grain of salt, right? They're not going to paint themselves in a poor light. Just look at all the data that came out during the pandemic. They've, without question, stayed closed longer than any other country by quite a large margin. And I imagine, and several other analysts imagine, it's because situations aren't exactly as they present them to be. We hope that we have accurate data from them. We hope that we can proceed to do business with them in good faith. But the reality of it is they have no reason to give us all the details. So as things move forward from an oil perspective, not just an oil perspective, a manufacturing perspective, an economic perspective, we're seeing China continually open up. We're seeing India continually grow as well. India is buying incredible amounts of oil, but we have to remember, although India has more people than China now, India's demand for oil is only a third of what the Chinese demand for oil is. So really the key to this whole oil conversation is what governments are doing. It's what, I'm coming out of focus. Sorry about that. That's so seeing things from India as well as China, it's going to be very key what governments are doing, what governments are deciding between the Bank of Canada's interest rate, and as they continually do more to push their oil prices, we'll see things change and grow. Oh,
your
my goodness,
camera
this
has just started a war with you, didn't it? It's just
It
gone,
has.
you know what,
It
Aaron?
has.
I
My
no longer
goodness.
want to focus on you. Oh, there we go.
And there we are.
Yeah, I'm gonna leave you with one question, all right? And it's gonna put you on the spot. So are you ready?
Please.
Are you sure?
Absolutely.
You've heard the news, the dam that's been blown up in Ukraine. Have you heard about that?
Yes, unfortunately so. Yes, sir.
Who did it?
That's a great question. It's a very political question. That
It
is. Woo!
Yeah, no, you don't actually have to answer that. But my main point and why I'm doing that, and it's got nothing to do with oil, while it's all part of the spectrum, is because I just like everyone every now and then to just challenge, question a couple of things. I think in modern day, media agendas are very pushed, and sometimes while you think you have your own decision, you don't quite have your decision. So I always like to just every now and then throw a left hook question out there, which is very political and very personal, but it's always good to just question, well, who did this? Who did that? And it's not always about war, but it's a question I wanted to leave everyone with, just to keep your minds intact. And it's something I'll always remember an old teacher told me, and is the only thing I think I ever took out of school. I'm not kidding. I think it's the only thing I ever learned, but it was an old history teacher, and he taught us to question everything. And it is by far the best advice I've had to date. It just so happens to be I'm in the best career choice for questioning everything. But it's just something I like to do. It was a group of Aussies, Chris reckons, group of guys from Brisbane. They got sick of the state of origin, and they went and blew it up.
They flew 28 hours to blow up the thing in Ukraine. I respect that. We all know Zixi had to blow it up. They practiced it 6 months ago. Who knows, Larry? Who knows, my
If you look what I've begun, I've started a war in the TradeDelicious chat, but it's good. Guys, I want to say a massive thank you to everyone who has joined us today, every single person who's been involved in the conversation, liked the video, or even come and subscribed. I really do hope you've enjoyed the content. We've had a very, very full schedule today. It has been great fun. I'm still holding that position, Great British Pound Japanese Yen. We don't really want to talk about it because it's not looking overly pretty, so it might be a matter of cutting our losses soon enough. But Aaron, I'm going to let you do the honors as always. Thank you so much for joining us. Thank you for teaching us a bit about the oil, and everyone else, I hope you have a fantastic trading day.
Same here. Thank you guys so much for joining us as always. Please go ahead and trade well out there and trade delicious. We'll see you.
What is it that you have that is going to give you an edge over them? Now, that's hard to develop. and it takes time to understand. But that's why I want to challenge you. Instead of just going, yes, I'm going to trade, I'm going to learn to trade, here's my money, let's click a load of buttons, do some research. You've got to be at the top of your game to keep it.
So I think I'm going to sell the bike. I'm going to take that money and put it in a margin call, and then that'll give me money to buy. This is how stupid me as a new trader was, because I was thinking like that money was going to turn into a new motorcycle. Well, guess what? That motorcycle didn't come that year. Okay.